redepositing, so oil and water won't mix.
Hello, is anybody there?
Hello.
Hello.
Howdy. Hey, this is
Hi.
Thomas. Hey, I got a weird question. If somebody can help me, does anybody know how accurate is Zillow anymore?
Hit and miss.
Really?
Depends on, I think, what you're looking at. I compare it. I look at it just because my clients are looking at it, right? Sorry, guys, I'm sloppy today. I'm super busy today, so I'm gonna even jump off early today. But I look at it just as a benchmark because my clients are gonna look at it, right? And I got to be able to respond to it. So sometimes I feel like it's on, or sometimes I feel like it's off. And I look at it more just so I can know how to respond to it, but not really as a guide. If it's confusing for me on what the price should be, I'll look at that and Redfin, just to see where their auto tools are coming in at. But what are you looking at?
No, I have a duplex in Linwood, and the Zillow once a month email me the pricing, and it's gone up to like 700,000. I thought that was nuts, but that could be just me.
Well, call your favorite broker and ask them to tell you the price. That's the right way to get you the right answer.
Yeah.
But good for you otherwise, right?
I don't see how my kids can buy a house.
Right. I know. I had to buy a big house. I figure my kids are going to live with me forever, right? There you go. Well, how's everybody doing today? Melissa, what's up? Did you get a new house?
I did, yeah. I've been busy getting it set up and big move and everything. So life's been a little bit crazy.
Good stuff. Well, Melissa is a broker, but she was able, what do you think? How did you succeed in getting that house for yourself? What was the clincher?
Paid a lot over asking.
Were you a couple
We were
grand over?
No. We were one of 10 offers. So I threw back a little bit of my commission. So that kind of pushed us over the top, I think. And just good relationship with the selling broker.
Good stuff.
Mhm.
Good stuff. Well, congrats on that.
Thank you.
Federico, I just think that your video, isn't it cool? Doesn't you get like the gold, if there's an award for coolest looking Zoom, that's you. I don't know why. You have like this smooth looking Zoom background. What do you guys think? You guys vote? Would you guys vote with me on that? See Federico looking pretty swank with his Zoom background, right on. Excellent. So what's hey, Dion, I wanted to hit you up for something. By the way, your podcast just came out and I'm going to blast it out. The one about if anybody needs a job, everybody should listen to that one. We'll pump it for you here. But I wanted to ask you, didn't you just recently attempt to, whoops, did we lose him? Where did he go? We just
I'm
lost
still
him.
here.
Oh, there you are. You switched spots on me. Were you attempting to go buy something like in Austin or something and you found that it's too expensive or competitive? What are you doing these days? Are you looking in state or out of state for your multifamily deals?
I was looking in Arizona and I found several that I would have bought that were probably better than the deals I'm getting here in Washington. But I couldn't find a location for the CDL school, and that was the reason for it. So since I couldn't do that, I'm back in Washington. I'm under contract on a duplex in Roy right now. And I just made an offer on a 37-acre ranch, and we'll see how that goes.
Oh, what are you going to do with that?
Ironically, I'm going to use a VA loan and house hack it. And that's what's going to determine it is if it'll qualify for VA, because it's got 3 houses on it. So it's under the 4 units, but the acreage might throw it off.
That sounds, the first thing I think of when I hear that is you need to go hang out with Todd McKellips and build some sort of tiny home community out there if you get it.
I think I would do RV pads, and there's 9 horse stalls. So that's going to literally, I'll be living there for free, even though it's like $1.5 million. But yeah, so that's what I'm doing now.
Exciting, fun stuff. That's cool. So are you finding then that you're out to Roy with your duplex offer, or is that because you had to get out that far to make things pencil, or what?
Kinda. I've got all of Pierce County and all of Thurston County, and I like to have my properties at least 10 miles apart. And that one just met all of my criteria, and it's getting just under a 10% cash on cash return. So it's not quite as good as the deals I usually go for, but this year I think I'm actually just going to have to settle.
Yeah. And so, yeah, is anybody else making offers on multifamily here in Washington? Anybody? Sorry, guys, I'm sloppy today because I'm really jammed up and busy today. So I'm going to have to jump off at some point at around noon. But anybody making multifamily offers here? Are you finding, Alex, that you're getting any, not refinances, but any new purchases on like duplexes and triplexes where people are getting more than a 10% cash on cash return these days?
I've seen it happen a couple of times in like the deep south, but nothing
What
in
does the
like.
deep south mean to you? Does that mean like Lakewood or, what does that
Oh,
mean?
my bad. Like Atlanta, Georgia.
Oh, okay. That deep south, right on.
Yeah, I've seen a couple from Atlanta, Georgia. I've seen some stuff coming out of like Arkansas, like kind of smaller towns. I've seen some stuff coming out of Texas, like, mid-sized towns, DFW area. Even like Tennessee, Ohio, we're still seeing some pretty good returns, but West Coast, nah, that's a dream.
So I got something interesting about that. So Dion, so if you're willing to accept, let's say a little less than 10% on your cash on cash return, then I imagine your big play there is because of appreciation on the reason. What is that then? Because why would you not consider, I'm just throwing it out there, just a discussion point, because I'm just saying whatever comes to my mind here. why would you not consider investing in like a big, we'll say commercial or bigger pond stuff, like syndication, where you can get paid better than 10% with, you know, where there's a development upside to it, and you can be as lazy as you want, because we know you like to be lazy. Is that, you know, I mean, I'm having great experience myself with that, not because I'm lazy, because I just, I don't have the drive and the time to spend on the other stuff. I like the passive. What do you think about what I'm saying there? I mean, because I'm getting great, nice, big returns on that kind of stuff.
There's two reasons that keep me in small multifamily. And the second one is why I'm still investing in small multifamily. The first one is 30-year fixed rate, low interest rate loans. I put the money to work, never think about it again. There's no loan reevaluation periods in 7 or 10 years. Nobody's going to look at the loan and say, hey, your NOI is not good enough, we're going to renegotiate, or you have to refinance with somebody else. I just don't even have to think about it. The payments will stay the same for 30 years.
Is that a risk averse thing though? Is that a risk aversion? Because you probably shouldn't have a problem, you know?
It's risk aversion, but you know, what happens if there's a pandemic the year you need to have your loan reevaluated? There were people last year that had units not paying, or units where their leases ended and they didn't put someone else in there. So it's just, well, it probably works great for some people, but it's not something that I'm looking to do, because I still work full time. I work like 50 to 60 hours a week. So I want investments like you. You said you're super passive. You don't have to do anything with it. At the most, maybe 2 hours a month managing 14 units.
Yeah.
So to me, that's pretty passive. But the other reason why I'm still investing in small multifamily is a lot of investors are in for a shock this year, because they chased the price as it went up because interest rates went down. So people are paying more for properties, which works great for cash flow now. But next year, county tax assessors are going to say, based on the purchase price that you just did last year, here's your new tax evaluation. So the expenses are going to be more next year. People are going to have to adjust rents. So 2 years from now, while I'm only getting like a 9.7% tax, cash on cash return right now, that investment will be doing much better in just 2 years. So that's the reason I'm doing it that way.
Because of rents?
Rents are going to, it's going to be like a inchworm effect. Right now, we've got all the expenses of higher properties, and all these owners are going to realize, if I don't charge more rents, I'm going to lose this property. So rents are going to go up, and I'll just be there to play along with it.
But that means that affordability has to be there for the tenant too, right?
Kinda, it's competition.
Are wages
too.
rising to cover, you know what I mean? Right?
Yeah. I guess I'm also looking at it like I have several friends right now that are looking for places to rent, and they just can't even find them.
Yeah.
So that's going to drive price up too, because more demand, less supply.
Right. I'm just bringing it up because I'm also thinking just diversification, right? Throw all your bags into the tenant market of multifamily tenant market, then something like a pandemic happens and you get kind of, you've got to ride the flow of the tides there a little bit. Maybe it works, maybe it doesn't. I'm just throwing it out there because I can get better than a 10% return on my, highly qualified syndication deals.
Right. And diversification is really important. And if you're doing it through syndicating and, probably different groups that you're syndicating with, for me, it's each property is more than 10 miles apart. So I'm not pulling from the same tenant source.
Yeah.
And I keep 1/3 Section 8, 1/3 military, 1/3 working or retired. So if a pandemic hits, Section 8 is still paying. If the government shut down, the people who are working or retired are still paying. So there's a way to diversify in one asset class to where I kind of sleep like a baby, but I'm not growing as fast as you. Like my goal was to get, $50,000 a year in cash flow, and I'm about to pass 100,000 a year. But I'm not, you're on a much larger scale growing your portfolio than what I'm looking to do.
Well, I don't know about that, but I'm just, it's all good stuff. I just like the discussion in front of everybody, right? Troy, you want to add anything into the mix there? Mr.
On why I don't do syndications?
On whatever you want to say, Troy, we like to hear anything you want to say. I'm not saying that I am like do one or the other one's better than the other. I'm just simply starting the conversation today. That's all.
Okay. Well, what are your goals, right? Dion's got very specific laid out goals that fit his investing style. He's got a very specific investing style, and he's super focused on that, and he's created a great niche for himself. I've created a niche for myself. That's where I'm focused. You have, you know, I was at your point at some point, and then I realized that I wanted to supercharge my returns. So I went from flipping and lending money and small single families to go into mobile home parks.
Yeah, I mean, don't get me wrong, I own apartments as well.
Yeah, no, I'm just saying that, but you're not buying more apartments right now, right? You're diversifying through syndications, and you're deleveraging yourself out of a single asset class. Whereas people like Dion and myself are more likely to be focused, because you generate wealth by being focused.
100% agree.
And you save you save your wealth by diversifying. I'm wealth building, and my goals, I $30 million in the next 8 years. So what my net worth is going to be. So I've got to be super focused, and I've got to pick up projects that require that kind of, you know, specialty.
So speaking of, are you going to buy that park next door to yours?
No, someone else already bought it, but when they go through foreclosure, I'll buy it from them again. The capital. So there's a park right next to mine. It's 100 and it's almost the same size. I think 200 pads, and it's not right next door. But they've been in tax foreclosure for a decade, and no one's done any repairs on it for a decade. And every time the water company threatens to shut off the water, they pay off the very minimum. And then, so some group just bought it they bought it from the state or the county at the top before the tax auction. So we'll see. They probably have to spend $2-3 million to do the redevelopment on it. And if they do, that's great. But stick-built homes down the street are only selling for 10 grand. So
oh, geez.
Yeah, so we'll see. There's no value in bringing in new homes, and there's not enough old homes to bring in.
Does anybody know what's the rules on, like, if somebody has an IRS tax lien? Do you guys know that they can't foreclose? When can they foreclose, or when can they do that? I see a lot of properties that have IRS tax liens that are liens for years. And what's the rule on that? Does anybody know on the right to foreclose on a tax lien? For some reason, I feel like it's not something they do. I don't know. Kevin Strong, you know about this? It's that they don't do it, but they, if you were to sell your property, the lien's on there. But for some reason, they're not foreclosing on the IRS liens. Or I'm unaware of what the rules are around that. Does anybody here know that? What that rule is? I know somebody on my team is dialed on that, but I haven't talked to them about it lately. Anybody? Going once? Going twice. Okay, that subject's done. What else? Colby. Hi. I don't know Colby, so I'm just saying hi. Are you with us, Colby? That could be like Donald Trump or something. We don't know who that is. Colby, just saying hi if you can hear us. Anybody else? What's going on with you? Anybody? Jai, what's going on? What's going on in your world?
Oops, sorry. Not much. I've had a couple of multifamily units under contract, waiting for inspection. That's
Do you find it having to compete for those?
Not really. Actually, they sat on the market for quite a long time. They were just distressed properties, so we're trying to see if we can get in at the right price.
Sweet. Good luck on that. Bellingham?
Bellingham, yep.
Bellingham. Our man here in Bellingham. All right. Anybody else? What else is happening? Anybody have any questions? Nobody? Everybody's doing perfect today? Everybody, Keith, what's up with you? Saka. Keith, how do you say your last name?
Saka, yeah.
Hey, look at that.
Ukrainian. Yeah, still dipping my toes in, and I'm working on getting a HELOC right now on my house in West Seattle, so I can start with my first property. So, I'm still a sponge and absorbing information from all of you and everyone else. So, I'm excited to get this real estate career going and get my first property. So, yeah.
Well, we are here to help. Listen
Thank
to
you.
Dion's,
Appreciate it.
you got to listen to Dion talk on his YouTube channel.
Okay.
Are you
Cool.
aware of that? Are you aware of it?
No.
Dion, drop it in the chat.
Yeah, what you got,
Good
Dion?
stuff. Dion is like the real deal, straight to it. That's what we like him. Simple
Cool.
information. That is, super great. So.
Great. I'll check it out. Is it under your name, Dion?
He's going to drop it in the chat so you can grab it.
Cool.
Anybody else? Colin? You in Spokane?
I am.
Welcome from the other side. What's going down in Spokane these days?
We're just experiencing the crazy real estate market like everybody else is.
Yeah.
We just got an offer accepted on an old schoolhouse here in Spokane. So we'll be doing some feasibility studies on it, and our plan is to turn it into a mixed use coffee shop with apartments.
Excellent. That's like a development project or just a renovation?
It'll be a semi-major renovation. So
do you know our friend
Alex will actually be getting an email from me in another couple of days.
Great.
We work with him in certain lending on a lot of deals, so
awesome.
We'll continue that relationship.
So Dion, you don't want to buy in Spokane because it doesn't meet your 10-mile radius. Yeah.
Not to sound too picky, 10 miles away from all the other properties, so it would, but then I self-manage, so I probably wouldn't go that far. I'm here in between Olympia and Tacoma.
Have you checked out Hem Lane?
I have. You had her on
What's your
here.
assessment? Yeah.
Yep. So I'm not using it yet, but I'm looking into possibly starting to use it.
Are you guys aware of what I'm talking about when I say Hem Lane? Hem Lane is making the circuit, I'll say, on property management services. You can piecemeal 1 unit, 2 units, 50 units, whatever. And they seem to have a pretty streamlined and easy sort of, I'll say, piecemeal, affordable management package that they're offering. Like in fact, like, if you don't have a contractor, you can either tell them who your contractor is that you like your preferreds, and they will call them. Like if you have some sort of late night call, they'll call your contractors for you, or you can use theirs. I kind of like that. I thought that was a nice feature of it. I don't know. What do you like about the Hem Lane service? If you were planning to use it, why would you, Dion? Just for stuff that's a little too far away, middle of the night type of problems, or what?
No, so it's a scaling thing. So I only have 14 units, and I'm adding the 2 more now. And so when I had 7 to 14, it was pretty easy. I have a spreadsheet with income and expenses, and I send the spreadsheet to the CPA. But it's getting to be a lot to track when leases renew, and just the data on each thing. I mean, I literally have a leather-bound book that I track my stuff in. So I was looking for software to put all the data in that I can go to one website, either on a phone, laptop, whether I'm at work or at home, and all the data is there. So that's why I'm checking it out to see if that's what it will do for me.
What do you use to currently collect your rent from your tenants? How are they paying you?
So I have a video on that because it would take 10 minutes, but here's the 10-second Cliff Notes version.
Oh.
It does 3 things. Makes it easy on the tenant, leaves a paper trail, and I don't have to go to the bank. So Zelle, ACH, Apple Pay, Google Pay, Venmo, Cash App, any one of those, because most of my tenants have their own way they like to do things, and I try to match them.
Gotcha. I use Venmo myself for my tenant.
Hey, Dion, do you have any tenants that don't have checking accounts where they pay through money order?
Yes.
Yeah. How does
Yes.
that work with you?
One. I actually get one paper check. She's a Section 8 tenant, so her portion comes as a cashier's check every month, and I deposit it with an app on the phone. So it's the only one that does that.
We were getting a lot of those here in Spokane, so that's becoming a bigger tenant base for us. And I'm trying to figure out a way where I'm not having to go pick up a check and do a manual cash.
If you can get them, so you'd have to, it would delay it a few days, but I get it in the mail, and then you have to make sure that it's a version of the check that can be deposited with an app. There are
Right.
some cashier's checks that the apps won't recognize.
Yep.
So you'd have to tell them, hey, go to a different location to get the right ones. And I don't know which one's the right one, but I'm getting those now.
How
There
about
was
you?
one they did
You-
send. Yeah, there was a money order they did send us where on the money order it says mobile deposits are not accepted. So I had to physically go down to the bank to deposit it.
You can like Walmart has a bill pay system that you can sign up for. So if they're getting money orders from Walmart, they can do a direct transfer. They can pay you online from Walmart by going into the store instead of sending you money orders.
Sweet. What are you using, Jay? What are you using?
I'm using Cozy for everything. I think they just recently got bought out by, I think apartments.com just bought them out. But going off of what Dion was saying, Cozy's, I mean, it's free, right? Cozy's completely free. And it actually, like, I really like using it because they'll do the credit check and automated payments, single payments, and like with my strategy where I do student housing and I'll do like rent by room, but with one master lease, they can all either put in their payments or just one payment, whatever works best for them, essentially. Because Hemlin, it's more of a software company still. I mean, that's what they are primarily, right? And like, I think it's might be a little too early to kind of consider them to be a replacement for a property management company. Whereas they can definitely assist as far as, you know, tracking and doing all that kind of stuff. And I'm sure they can assist with finding a contractor. But yeah, I really like using Cozy.
Cool. Good stuff.
Also, can I share something I learned?
Please
A
do.
lot of you guys probably already know. But I just recently did a refinance on one of my properties in Bellingham. And besides having to go to two different companies, because the first company, like the appraisal came in like 100,000 short, and then like 3 weeks later, I went to a different company and it came up, I think 125,000, something above the last one. But a thing that somebody told me about was the PE. Have you guys heard of mortgage PEs with mortgage brokers?
Mortgage PE.
Yeah, I'm not sure what it. I don't even know what it stands for, to be honest.
PE.
But somebody from the mortgage field told me to ask for a PE. I think it stands for price
Price.
exception or something like that.
Yeah.
Basically, a lot of mortgage brokers will have a fund to get your business, right? So like when you refinance or if you're getting a first time loan, you can ask for a PE. So they will essentially credit you the cost of the refi. Like, so if it's gonna, like for me, for this last refinance that I did, I ended up saving $3,500 in loan cost. Cause all I did was say, hey, can I get a PE? Can you request a PE on this refinance? And they have it in their budget, because not many people know about this. I for sure didn't know about this on my other properties. And when I got the email saying, hey, you've got a credit for $3,400 towards your refinance, I was like, oh, there you go.
Cool.
So try it out.
We'll have to have somebody jump on and tell us more about that. I was trying to look it up while we were sitting on here. I feel like I heard somebody talking about that. I don't know, in the last month.
It was
too.
with Keith. I mean, I did the refinance with Keith.
Oh, you did? Okay.
Yeah, so
We'll have to have him jump on. We have to beat him up. He hasn't been on with us yet for a while. Hi, Lily. What's going on? How are you?
Good.
Good, good.
So yeah, I have total of 20 unit, and I just bought a lake house in Linwood, and I am looking for excavator to level the land. And I don't know if anybody can help me.
I thought I just saw some excavator talking shop on Wari yesterday. That's just, I would just throw it on, do you know what I'm saying? When I say Wari, you know what I mean? Facebook page for, that's a good question. I don't know an excavator in the Linwood area.
Yeah.
Yeah, I
Okay.
don't have one for you, but I'm sure you could easily get about 1,000 people to respond if you posted something like that on Wari or Seattle Investors Club.
Okay. I'll do that.
I have to jump off and go pick up my daughter who doesn't know she has an orthodontist appointment in 30 minutes. And then I have 2 appointments this afternoon. So I need to leave it there with you guys. Does anybody else have anything today that they want to talk about? I can go do something for a few minutes and let you guys keep talking, or we can jump off. You guys ready to jump off, or do you guys want to keep talking amongst yourself? If you want to jump off, just go, let's jump off, right? If you guys want to keep talking, go, let's keep talking. And I'll leave leave it rolling here for you guys while I'm getting out the door. So that's what I'm going to do. I'm going to hop off. I'm just going to stop my video and my sound, and you guys talk amongst yourselves if you want to. And when I roll back around here in the next 10 minutes, if you're still talking, I will leave it rolling. Okay. So I will see you guys next week. Thanks for showing up as usual. Dion, you can run the show if anybody wants to hang out or anybody wants to hang out. I'm out. See you guys.
Bye.
Bye.
Okay, I have a question, and then if you want to hear the answer, you can stick around. If you don't want to hear the answer, it'd be a good time to dip out. Everybody here has like a different background and a different goal. Why real estate instead of stocks? Or do you split and do half and half? Because earlier Julie talked about why syndication or small multifamily or whatever, but who's got a compelling reason why they invest in real estate instead of the stock market?
I mean, I do both. Like, I think most of us will have a small stock portfolio. We just want to diversify a bit, right? Like, just it doesn't make sense to dump all your eggs into one basket. And I feel like real estate is a lot more stable, a lot more predictable than the stock market, and you can get equally good gains. Like and you have a lot more control over the asset. Stocks are kind of nice because, again, you don't want to have all your eggs in one basket, right? Like if you have all your eggs in like the Pacific Northwest and the big earthquake hits and suddenly everything's gone, then you're wiped out. So it's nice to have some holdings outside of that, just in case.
Yeah, I agree. It's about having more control, I think, too. Like you said, the people I've seen that have invested in real estate have seem like they just have more control over that market as opposed to the stock market. But you have to diversify in both, I think. I think it's good to have some stock and some real estate. And for me, and you guys, it really sounds like the real estate is the primary, though, right? And so I think part of it's a matter of what are you most attracted to, what draws you in the most as well, and what are you most interested in. I'm more interested in real estate than stocks, but historically, it seems like real estate's a better bet, in the long run. So,
for me, it's
Troy?
I see it as a different type of impact in my community and the communities that we invest in. So, I grew up and went to school for architecture. So for me, there's just a little bit more of a love around that more than just stocks, where it's more of a transaction. I'm with a lot of the groups where I invest in both for diversification, but I just get a different sense of impact when we go and we renovate the different properties and we have tenants and we try to help with affordable housing than I get when I get a good return on a stock bundle. A little bit more emotional than what probably people should think, but that's the reason why I'm more.
It's more tangible, is what you're saying too. It's something you can actually get involved in and touch and feel, and
it reminds me of a lot of a story that somebody would say of some people that have jobs and they never can see like the tangible at the end of the day effect of what you've done. Like a bricklayer can go and they can see they built half a wall at the end of the day, versus like some jobs it's like you don't really see the impact you're making until like months down the road. And for me to see it day to day is really nice. Good call on that, Keith.
I bought $1,000 worth of WAMU, and then it went bankrupt, and that was the only time that I ever owned stock. You can't change the value of a stock. That is that's the only reason that it sucks. I mean, I don't know who's running it. I know who's running my properties. I am, or a designated person. I control the value of my assets, not some market that has become completely unhinged from reality and where the rules are changing and other people have complete control over the market. I control my properties, which is why I don't also do single family houses anymore. You can't control the market, right? So in commercial and large multifamily properties, you control the value of the asset. So that's why I do that. But I also believe that you can attain the same kind of asset diversification in real estate as you can in your classic pie diversification that all the wealth managers tell you. You know, if you're looking for a growth stock, you're going to invest in something like short-term lending. You're going to park money with Flynn Family and you're going to get 12% returns on your money, and you're going to allocate a certain amount of that. And if you're looking for bonds, you're going to invest in something like mortgage notes, and you're going to get 4, 5, 6% over 30 years, and it's going to be very slow growth and then if you want to do, you know, more traditional high-tech things that have got high growth potential, you're going to get involved in syndications, and you're going to get a low return until all of a sudden it pops and it sells and you get a big payout. So there's all these different, and then like Alex was saying earlier, you've got geographic diversification. I can do each of the diversification portfolios in different geographic areas, so that if there's an earthquake that wipes out Washington, my Michigan properties are not going to be terrible. And if California falls into the ocean, my notes in Arizona are going to be worth more, right? So stocks are terrible. I don't know why anyone would do that, but
I'm so glad you spoke up. I was afraid I was going to be the only person that literally said the same thing. No stocks. I've emptied out retirement accounts.
Yeah.
I mean, just real estate gets you appreciation on usually 4 times what you spend. You have tenants paying down the mortgages. You have all the tax benefits and control. Yeah. Okay, cool. So I thought I was the only one there for a minute.
No. And I don't hold anything in tax advantage accounts either. I want to live off of my work. And so everything, my cash flow goes right into my pocket. I don't have to secure it in an IRA or a 401k or whatever else, because I want to be rewarded now for what I'm doing now. I don't want to be rewarded in 25 years from now for the work that I'm putting in now. That's crap. And that's the wrong kind of mentality for someone who wants to be active and wants to have a $30 million net worth. So, everyone's goals are different. Take what you want from that. My little brother's buying another Airbnb, and he's high up in the Amazon world and just cashing out his RSUs. He doesn't care that they make, more money than most people do on their real estate portfolio because of his Airbnb. It's just money for the future when he's 60 and 35 years. When he retires, he'll be worth $30 million, $40 million, but that doesn't help him today.
I forget who said it earlier about being emotionally invested, but I agree with that. If you want to invest in what you're excited about, because the more emotions you have tied to it, not maybe investing on emotions, but if you're excited about investing in that asset class, you're more likely to stick to the plan. So I think that matters too.
That was medium. That was with the emotional component to it. Has anybody ever heard from or like Anderson Advisors and their approach to investing in stocks? So they have a formula that they use that is more like dividends based, and they focus on cash flow than what a lot of people do, where they just focus on appreciation of stocks, which gets them in a lot of trouble. Has anybody been familiar with that or heard of that one as well? I'd be curious.
For the last 5 years, everybody said invest in AT&T. They pay a 7% dividend. It's always going to go up, and all of a sudden they cut it this week.
Right.
So people that have been
Really?
banking on that got slapped in the face.
Oil and gas was like that. Chevron, back when I worked for them, was like the same thing, and then they cut their dividends as well. So
I personally think I'm new on my stuff is more loan modification and stuff, so I'm new to the acquiring physical property. But I think a little diversification when it comes to stocks is a good thing. You know, you want a liquidity conversion. You can always liquidate stocks and convert it to real estate, but you can't liquidate real estate quite as easily. So my humble opinion, if you ask me from like a pie perspective, I'd probably say for me personally, it would probably be 85-90% real estate, maybe 10% stocks. The point that someone made about the geographical diversification, I understand that, but I'm more of a realistic guy. So I guess for me, the probability and possibility of an earthquake is not going to be a large emphasis of how I structure my real estate portfolio, right? What's the likelihood of that happening? So that's not a compelling factor to say, hey, I'm going to do a lot of in XYZ state because this particular area, possibly within the next 200 years, can have an earthquake or something weird happen. So I think personally, a good mixture of summary is a good thing. I think the person who made the comment about the 401k, and a lot of times I think Deanna probably can relate to this too. I also am law enforcement full time. People get sold on a tax plan, not a tax strategy, right? So a lot of times I think the big misconception is, hey, you put your money into something and you let someone else take control of it, as Troy Fisher mentioned, and then you don't get it back 20, 30 years later. Hell, who knows what the tax laws are going to be given with all the stimulus packets in the next 10 or 15 years. So there's other things you can do. You can swing trade, right? You can do option trade. You can buy credit spreads. You can buy puts. So there's a lot of diversification when it comes to stocks. So I guess it's good in summary, not for us to just get pigeonholed and just think of when we're making the analysis, real estate versus stocks. Are we talking about traditional investing when you just stick it into a 401k and hope that everything comes out all right in 30 years?
Yeah, I agree with Kevin on that. Like, I'm definitely diversifying. Like, obviously my main thing is real estate investing, but like I run like you, Dion, you're in the trucking space. I run a logistics company, so that's my, that's what kind of like funds my life and all that kind of stuff. All my real estate investments, whatever, all my cash flow, I don't let it sit in the bank. I'm dumping it back into other projects, or I'm dumping part of that. Like I don't. So whatever I cash flow really well on my rental properties. I do not use that money. I have a certain percentage saved for maintenance and overhead fees, whatnot. But the rest of it, I do not let it sit in the bank, because it's just sitting in the bank for me is just doesn't work. It's just going down anyway. You know what I mean? So like, if my money, if my cash flow is making more cash flow, that's what I'm doing. Like I'm trying to diversify my cash flow. So if I put in stocks and it goes, it's okay, it goes,
So there's one little twist on how you look at it, Jay. My rental profit covers my expenses, so that my W-2 is completely optional and has nothing to do with the income that I need to live. So that becomes the savings rate. And I'm like you, about like 60% of my rental income now is also saved for investing. But anything above like $30,000 sitting in the bank, that's my reserve account to be, swan, sleep well at night.
Mm-hmm.
Every penny above that needs to be put to work to make me more money. And I'm not at the point yet where I want to diversify, because every penny that I save towards real estate keeps my reserves solid, gives me more money for down payment, closing costs, immediate repairs. So every penny into that investing account opens up more options on investing in real estate. At some point, I guess it would make more sense if I couldn't handle more properties to start looking at stocks or syndication or something, but I'm just not excited about it. So that's the thing I think I'll
Yeah,
always
that's what
get.
happened to me this year too, is like all my like offers, I put in maybe like 40 to 50 different offers in my market, and like nothing's hitting because obviously it's not really um investors market at the moment, especially in those kind of areas that I'm in. So I'm just thinking like, hey, if I'm sitting on cash, this cash is losing value day in and day out. I'm not going to be able to use this much money to buy a house next year because this inflation is going to keep going. That's the biggest tax on us. So why, like I need to be, because I think if you would have asked that question maybe a year, 2 years ago, I'd been super bullish on real estate. Just like, no, real estate, that's it. Just real estate, no stocks, no stocks. And then like as I'm growing, I'm thinking, okay, I need to, instead of having, like you have that 30K that you have as a fund that you need to have for emergencies. When I have the same thing, after that, like whatever I make over that or I store, it's just gone. Needed to be working,
Right, but you can work it, you can lend it, right? You can put
Yeah,
it
you can do
in
whatever. Like
full
I'm invested
lending.
in businesses as well, like
Right,
like friends' businesses and whatnot. Like you don't have to just be stocks. You can do.
Right,
There's a
yeah.
bunch of other investments you
Yeah.
can do other than real estate as well.
I mean, that's kind of my point, is that I've got all these other options to stocks that are real estate focused that I can, we do a CD ladder. We do a 24-month CD ladder for all of our expenses. So after that, anything after that goes into a lending pool that we use for lending, short-term lending. And that's, 3 to 6 months, so that we stay liquid in case we need to pull that money. But my liquidity comes from having larger credit facilities, right? I keep business lines and credit cards with high amounts, so that if something unexpected happens, I don't need to pull cash from my CD ladders, and I can use credit cards and lines of credit to close those out. And then my CD ladders are set up so that one CD, about 10 grand cashes out every month on a 24-month basis, so that if I have any credit cards that I need to pay off, I can do it on a monthly basis, and then not pay any interest on my credit cards.
That's a good point, Troy, because I recently did that, like with all my properties. I instead of using my bank accounts to pay for these I just did a big like update on one of the properties, so it was like about $10,000-$15,000 worth of projects, and I just thought like, hey, why am I using money from like the cash flow or like whatever? It's just dumb. I need to be using the bank's money and earn either I get some sort of points or some sort of benefit, a credit, whatever it is. And after using that, like my credit went up.
But they're like, you used money?
Yeah,
Let's give you more money. Great.
Exactly. Like you're not just using a debit card, the worst thing ever. Yeah, exactly.
This is a great point that Troy and his Singh are making, because I got a decent check back from the kind of Capital One cards where you give you the cash back, and they give you the options when you're on the menu. They say, hey, do you want to acquire this towards your balance? And I always say no. I tell them to send me a check, because I want to cash it and buy precious metals with it. Because once again, I'm trying to hedge against inflation. So I think this is a really good discussion, Dion, that you're bringing up. I really do love this group. I try to tell people, all the time, it's funny when you go to use your debit card or your credit card, it doesn't ask you your occupation or if you're happy.
Yeah, this is a great topic. It's really interesting, Troy, what you're just mentioning about keeping things liquid so you have access. So that's really interesting topic. I'd be interested in diving more into that. So as a new investor, so.
It comes from years of experience and listening to people and piecing it together and figuring out what works best for you. Everyone does it differently. I just find that having access to credit facilities is what has superpower, using leverage as a weapon instead of as a lodestone.
Right.
You guys want to do a podcast on this? Kind of like a little fireside chat podcast?
Dion and I agree on this. There's not a lot we agree on, but we agree on
Hey, Dion and Troy, then, do you want to jump on and I will moderate and let you guys have a conversation in front of everybody as a podcast topic on this? You guys up for that? Anybody want to do that? You guys
I'm
think
always
about
willing to help with whatever.
Yeah.
it? Okay. Well,
I'm only a text away.
let me get Joe on that. He's off on a river somewhere this week. Guys, if I don't shut this down, it'll go on forever and it'll be really weird and it'll all get recorded for like 3 hours. So it's 12:18. We're going to shut it down today. I was listening as I was getting ready to get out of here. Awesome topic, Dion. Good stuff, you guys. Sorry to cut you off early today, but life gets in the way here. So it's all recorded. You guys can refer back to this once Joe gets it posted on our YouTube page. If you want to listen up here at the end, the last 20 minutes when you guys were talking about all this again, it will be there for you. Cool?
Great chat, you guys. Thank you.
Yeah, thanks, Joe.
Thank you.
All right, guys, enjoy the rest of your week.
Take care.
You
You too. Thank you.
Bye.